top story today. Spain, we learn, lost its AAA credit rating care of Fitch. To get more into that and the significance, we're joined by Axel Merk. Axel, a regular guest here on Bloomberg News. He is president and chief investment officer of and portfolio manager at Merk Investments. Now, he foresaw the credit and real estate bubbles. Axel also wrote the book Sustainable Wealth. He says the downgrade could actually be the result of that IMF EU bailout. Hi there, Axel. Thanks for joining us. So first, explain to me why the market actually was expecting this Spanish downgrade.
Well, sure. Well, first of all, in the market, Spain in recent weeks has had to pay much more for its debt issuance, and as a result, again, the rating agencies are just following suit. But the reason why I bring in this bailout package from the European Union, that provides a political cover, so to speak. And without that bailout package, a lot of pressure was on the rating agencies not to downgrade these countries. Now that there is this backstop in place, the rating agencies actually have a freer hand. They can downgrade these countries where they're supposed to be, and then have the market react to it more normally, rather than having this political game that if you downgrade them, these are the evil credit agencies. But they are still late. They are still downgrading after the fact, after the market already is requiring a much higher yield from these countries. Okay,
so now that it's going to cost more for Spain, you know, who's going to buy their debt? Do you foresee that as being a problem, a challenge?
Well, Spain has actually been very good in continuing to issue debt. One of the problems Greece has had is they always talked up the markets before they issued any more debt, where Spain has continued to issue debt even at unfavorable rates. And the good news here is that when you pay a high price for your debt, the buyer is getting a good price, and there's a chance that tomorrow you can trade this at a premium and make a profit. Whereas if you're like Greece, that always talks up the market, the problem is that you're going to lose your investors, because if they always lose each time you issue debt, you have a problem. There is a risk-friendly capital out there, but you need to price the debt accordingly. And if that happens, that's just fine. There are investors in there that are willing to take the risk of Spain, and they want to be compensated for it. And
sure.
Rating agencies have to reflect that.
All right. So, Axel, what are your impressions of how successful this $1 trillion US dollar bailout package has been so far?
Well, it buys time, but it has to be followed through with action. Spain just today passed more austerity measures, but Spain has a minority government. They only had one person in the majority to vote with the government, and that is very tight. That means further measures, and they need to do more structural reforms, are difficult to pass. Spain has a problem with the regional banks. They've given a deadline by the end of June for some restructuring in the regional banks. The one failure we had last weekend, for example, is a symptom of that. There needs to be a lot done. This $1 trillion bailout package buys time, but we need to see action. We need to see a lot of action. And, of course, the markets are nervous, and the rating agencies are just reflecting that.
But, Axel, you know, these downgrades, these austerity plans, they just curb these economic recoveries. I mean, they're not even in recovery mode. It's just, you know, right? Do you agree that there's just no real potential for organic economic growth in these Euro countries?
Well, we have to differentiate between the weaker and the stronger countries. The weak euro is a great help to a country like Germany and other stronger players. Of course, the countries with problems will have to grind through these problems. But unless these countries default, and I don't think they will, Spain in particular not. Spain is a real country with a real economy, and so they will have to get through these. And if you don't print and spend as much money, that should ultimately be a stronger currency.
All right. Axel Merk there from Palo Alto. Thanks for the conversation today.